Welcome to the TechWise Financial Planning Podcast. My name is Evan Frazier. Very excited for the episode that we have for you today. We're going to be talking about Bitcoin. There's a lot of questions, a lot of misunderstandings about what it is and what it's not. I'm very excited to have Ryan Rasmussen from Bitwise Asset Management. He is a specialist in the kind of crypto area. He's been a research analyst for them for a while, and it just has a long history within that. So welcome, Ryan, to the show.
Thanks, Evan. Happy to be here.
Excited to have you. So tell us a little bit about your background and what Bitwise is.
Yeah, happy to do that. Bitwise is a specialty crypto asset manager. We've been around since 2017, so we've been in the industry for a relatively long time. Our focus is 100% on Bitcoin and crypto assets. It's all we do 24/7, 365. We're really here to be an educational partner for institutional investors and RAs and financial advisors and investors who want to get exposure to the crypto ecosystem, whether that's Bitcoin or other crypto assets, but they want to do it in a format that's familiar to them, that fits into their traditional workflows, and that looks more like traditional investing, whether that's ETFs or other products. And so we really, put education first, and we focus on helping our clients, helping our investors understand what Bitcoin is, what crypto is, how to get safe exposure to it. And as you mentioned, I've been at the team here for 3 years now. I think my 3-year anniversary was last week. So it's been quite the journey at Bitwise. I'm one of the senior research analysts on our research team, focus on those educational efforts and spend a lot of time doing webinars and building out our content pipeline and writing white papers and reports, but also spend a lot of time talking to clients and keeping kind of an ear to the ground on the crypto industry and supporting our product efforts. Before I was at Bitwise, I was at a company called Cetera Financial Group. It's a large network of independent broker-dealers. They have about 10,000 financial advisors that use their platform. And I was on the corporate finance team there for around 8 years, doing a variety of corporate finance roles from M&A to planning and analytics. And then before that, I worked at Oakley, which is the lifestyle kind of sunglasses company down in Laguna Beach, California, as a business analyst. So it's been a fun evolution from working in kind of consumer lifestyle business into traditional finance and now into crypto.
Wow, it's quite the movement into the finance space. So for a lot of my investors, like they hear Bitcoin talked about a lot on the radio, and one day it's good, one day it's bad, and that there's just, I think, a lot of different misinformation around it. But I think maybe what I'd ask to start with is tell us what is it?
Yeah, it's a good question. There is a ton of information on Bitcoin. When we think about Bitcoin and crypto assets, these are just digital assets. Bitcoin itself is a digital store of value. It's a way to store value or send and receive value at the speed of the internet. We think of it a lot as a digital version of gold. There's a limited supply. There's demand coming from investors that creates this commodity-like structure. But Bitcoin really is just a digital asset. It's a digital store of value. You can use it to send and receive money or just store your wealth digitally.
Gotcha. So you kind of called it the digital equivalent of gold within there. Why is a limited supply important when we're talking about, a place to store our money?
Yeah, I think it goes back to, really the concept of money in general, right? Today, the world is largely dollarized, and the US dollar, which we live and breathe each day, is really backed by the federal government. The monetary supply, so the supply or demand or contraction of that money supply, is really governed by the Federal Reserve and the central bank. And the reason it's important that we have a digital store of value like Bitcoin, where the supply and the monetary policy is governed by code or technology and not by a government or a central bank, is because we've seen monetary policy get off the rails. We've seen the increase of supply of the dollar. We've seen that result in high inflation, high interest rates, and that obviously impacts individual Americans, individual consumers, investors. And so when we look at Bitcoin and we look at a asset that has a capped supply or limited supply of 21 million Bitcoin ever, you can start to imagine a world where it's protecting wealth instead of eroding wealth, because the supply is not going to continue increasing. You're not going to continue inflating away people's value, people's wealth. And so the limited supply really matters because it also helps you anchor around, potentially what incoming demand could do for a commodity where the supply is fixed and demand rises.
And I think to maybe drive that point home, I had read a few years ago, I think it was something that the dollar, since the beginning of the Federal Reserve, the creation of the Federal Reserve, the dollar is now worth like 94% less than it was when it had started there. And so it's just, and we've seen it today with inflation that's caused because dollars aren't capped and that they can be printed. The cost of food doubling over the last couple of years, sometimes more than that. So what I'm hearing from you is that Bitcoin can really help kind of prevent that from happening when we store it there rather than storing it in dollars. Is that right?
Yeah, I think that's a good recap. We look at Bitcoin as a hedge against inflation, a hedge against that erosion or devaluing of the US dollar. And we think it's important that investors think about that when they think about preserving and growing their wealth over the long term.
It actually kind of reminds me, I started talking about this. My kids have a favorite TV show called The Tuttle Twins. Have you ever heard of them before?
I have not.
Um, it's a show with very conservative values, but it's more economic. So they have an episode on the inflation monster, but they have one on Bitcoin. And I got to tell you, it's a little odd and humbling when I walk out and I hear my kids debating Bitcoin and they're like 5 and 6 years old. And I'm like, how did you even know this? And then I have to go back and like, oh, they watched the Bitcoin episode recently. So for all you parents out there, I would strongly recommend that Tuttle Twins, but be careful if your kids start talking too much Bitcoin there.
Yeah, I love that. I think that kind of speaks to this broader movement that we're seeing in the world into an increasingly digital world. And we talk to investors about why digital assets have value and why they matter. And if you believe that we're moving into an increasingly digital world where young generations are interacting with technology at an early age and they're retaining what they're interacting with and they're getting used to digital economies, whether it's digital media or what have you, we think digital assets will have an increasing importance in a world that's increasingly digital. And that's why it's important, in our opinion, to at least learn about Bitcoin and consider it when you're thinking about how to invest for the future.
Now, we keep calling it digital. It makes me always nervous because I think about, how fragile sometimes our private information is and how easy it's to get hacked. So I guess walk me through, how can Bitcoin be safe from that standpoint?
Yeah, that's a great question. So thinking about Bitcoin, it's really just, and the term crypto actually comes from this concept of encryption, right? And encryption is something that technologists and computer scientists have been working on for decades. And every decade or so, there's a technological breakthrough around encryption and around internet-based protocols. You had the advent of email at one point, which allowed you to send information back and forth from one person to another over the internet. You had the ability to encrypt payments online, which happened ironically or maybe coincidentally in the same year that Amazon launched in 1994. Then you had the advent of encryption that allowed you to encrypt media and data and send that online. That's how you have social media and streaming services. And then with the advent of Bitcoin in 2009, you had the ability to encrypt information like value, like dollars, and be able to send dollars or value around the world at the speed of the internet. And so I think when you think about it being a digital asset, it's really a technology, and technologies tend to have these industry-defining breakthroughs. And we saw it with email, with e-commerce, with streaming and social media. And now we're just seeing it with the financial sector with the advent of Bitcoin. And it's some of the strongest technology out there that exists from an encryption standpoint. And you've had governments and you've had data scientists and universities and all these nonprofits building this kind of open source encryption technology that Bitcoin's based on for many, many years. And 2009 is really just when it was brought to the public or brought into a format that was usable by the public. But it's been researched and and improved on for many, many years and many decades. And it's very, very secure.
So what I'm kind of hearing is it sounds like we've talked about it as being a store of value, but also being able to send it around the world. So if we maybe look at the banks and kind of compare it to the banks, um, because it's digital, I don't have to have a big Scrooge McDuckian vault to hold that in there. I can hold it myself. Um, Whereas at the bank, if I wanted to send money over to you, I'd have to send more like a wire. It would take a while. The bank would have to do all the paperwork. But it sounds like with this, that I can send this money directly to you and kind of cut the bank out. Is that correct?
Yeah, that's correct. It really gives you a way to store value without an intermediary, without a bank in between you and your money, you and your wealth. And so it does remove inefficiencies and intermediaries from the process. It allows you to send money nearly instantly at the speed of the internet, at least anywhere around the world. And it does that without charging the same amount of fees that a bank would charge. And so we see Bitcoin used often for wire transfers as well as just buying and holding. People use it to send money globally and remittances. And that's because it can settle near instantly. It does it at a far lower cost than a wire transfer or a Western Union payment. And anyone, anywhere in the world can access it without a bank. And there's this famous transaction that happened with Bitcoin where $1 billion was sent from one person to another person, and it settled for less than $1 or less than $10 in less than a minute. And so you can kind of use that
Wow.
as an image for, if you tried to do that during a bank, it would take days, if not weeks, and it would be far more expensive than $10.
Well, with that, I guess then, it sounds like without that bank intermediary, we don't have to worry about bank runs or things like that. I know it's been a year or two since we've had the SVB bank run and things like that. Um, is there a possibility that the, owners of Bitcoin could all of a sudden just turn it off? Is that even a possibility with that technology?
So it's not a possibility because it's open source, because it's this network where thousands or hundreds of thousands of people around the world are kind of running the software on their computers or what we call mining equipment at home. And that software is what keeps the Bitcoin network alive. And so you would have to, at this point, have collusion among, 500,000 or more people around the world to decide to make a major change to the network. And that's just extremely unlikely because any change you make to the network would impact the value of the Bitcoin directly. And so there's really no incentive for all those people to collude to do that. And so it really is this decentralized monetary system that anyone can access and that exists 24/7, 365 because it is running on computers and on software all around the world at all times.
So unlike kind of fiat currency from places like the US government, like we don't have to necessarily worry about a currency failure like we've seen maybe in like South Africa or even past currencies in the United States back in the
Mhm.
revolutionary time, things like that. Is that the case?
Yeah, that's exactly right. That's why we see, third world countries or developing countries embracing Bitcoin is because it gives them a way to preserve their wealth outside of authoritarian regimes or outside of these financial ecosystems or countries that rely on hyperinflation. And we've seen it time and time again in countries like Venezuela or Turkey or Argentina, where they do have runaway hyperinflation that's far worse than what we've experienced here in the US that we spoke about earlier, talking 50, 60, 70% year over year inflation rates. They turn to an asset like Bitcoin to preserve their wealth because they can access it with a smartphone. They can access it without going through a bank, without going through the government, and they can rely on it more than they can rely on the central bank that runs their financial policy.
You talked a little about authoritarian governments and things like that. What I hear from our own kind of authoritarian governments is that they talk a lot about Bitcoin being only used by criminals for drug deals or murder or things like that to hide those things. Is it really that easy to hide the Bitcoin? And is it really being used in that way?
So it really isn't that easy to hide what you're doing with Bitcoin because it's this open source software and this network that anyone can access. Anyone, including the government or law enforcement or the FBI, can see what any one person is doing at any given time. And so what we've often seen happen with these hacks or exploits or theft that occurs or money laundering that does occur on this permissionless payment network is that the government's able to track where that money's coming from, where it's going. And at some point when they try to offboard from the Bitcoin ecosystem into some other type of currency or asset, that creates a flag for the government to know who executed the fraud or the money laundering, and allows them to kind of go after them and triangulate them. So it really, it's a misnomer, I think, in the broader ecosystem that doesn't understand necessarily that what Bitcoin is fundamentally is that it's a transparent way and it's a decentralized way to send money back and forth. But that also means that if you're carrying out illicit behavior, that's also transparent. So that was a long-winded way to say it's difficult for cyber criminals to use Bitcoin to launder money. It's often talked about in mainstream media because it grabs headlines, but the reality of the amount of the Bitcoin networks that's used for illicit behavior is a very, very, very tiny percentage compared to the more broad ecosystem that's used for investing or sending money around the world.
And I think an important note to say is that dollars themselves aren't free from being used to launder money to pay for drugs and things like that as well within there. So yeah, it's
Very
one
true.
that I've always felt was not a very good I guess con against Bitcoin. If we're talking pros and cons, it seems like it has just the same problems with that, which I think actually raises up a really good point, because for a lot of my listeners, they're really looking for more of a biblically responsible investment. And one of the things I like about Bitcoin is that compared to the US dollar, it's much more morally neutral, right? Whereas the US dollar, the government can print it to fund wars, they can print it to fund all kinds of programs, to fund the FBI to spy on Catholics and things like that. Whereas Bitcoin cannot be manipulated in those ways to fund those, terrorist activities that we see with that. I'm actually going to take this for a minute and plug a book that I think all of my listeners should really look at. It's called Thank God for Bitcoin by, there's a bunch of authors, but Jimmy Song is, I think, the primary author on there. Fantastic book. And it just really talks about the relationship between faith and our relationship with God and money, and how Bitcoin can help fix that. Because really, when you talk about fiat currency like the US dollar, it changes the relationship that we have with money, and not in a good way. And I think Bitcoin can really step in. I won't ruin the book for you, but I think they lay out a good case for why Bitcoin can repair that relationship within there.
That's awesome. I mean, I think you're exactly right. It's credibly and morally neutral. It's a technology, it's a software. It doesn't have an agenda, and it really is just built to do one thing and one thing really well. And that's kind of a beautiful simplicity of the Bitcoin network.
Absolutely. So we've talked a little about what Bitcoin is and what it isn't. A lot of people I talk to, they feel like it's a little overwhelming to try and figure out how to buy Bitcoin, how to hold it and keep it safe and stuff like that. So Ryan, tell me, what really are my options? How can I get exposure to Bitcoin without having to get a PhD in computer science?
Yeah, it can be complicated, certainly. It's partly why we're here as partners for investors to help them get access to this complicated industry. There's really three ways to buy Bitcoin if someone wanted to. You could go out and buy it yourself and kind of store it in a self-custody way. That does involve a little bit of technical know-how, and you have to download these applications on your computer or on your phone. Often you have to use like a hard drive or a device that you plug into your computer that kind of stores the Bitcoin, that like a flash drive is what it kind of looks and feels like. That's one way to do it. That's how I would say the really hardcore Bitcoiners often do that. But it can be complicated. And if you lose that, then you're kind of out of luck. Then you can go through exchanges, companies like Coinbase or Kraken or Gemini, which some are great companies. Some are like that FTX company that some of you may have heard about, which aren't so great. And so many investors avoid using centralized exchanges because you're really putting your trust in a company that in some cases is onshore in the US and regulated by the US government, like Coinbase, but in some instances, like an FTX, is offshore in an unregulated market. And we've seen what happened to investors who took that path. Then there's the third way to access it, which is through traditional investment vehicles. The Bitcoin ETFs just launched earlier this year. That's really one of the most secure and the simplest way to access Bitcoin. You can buy a Bitcoin ETF just like you would buy an S&P ETF or a NASDAQ ETF. You can buy it in your brokerage account or your retirement account. And it includes, buying ETF comes with a low management fee, very low management fee. It comes with institutional grade security. So you're using regulated third-party custodians that only focus on securing digital assets. And it comes with partnerships with some of the largest financial institutions in the world, including BlackRock, Fidelity, or Bitwise, who spend all day, every day managing and trading the assets and custodying the assets on behalf of customers. So there's three ways to do it. You can do it yourself, you could use an exchange, or you can invest in an ETF, which provides simple, secure access to Bitcoin in a traditional format.
Yeah. And I should like to say at this point, though, just to throw out the disclaimer that ETFs like that, mutual funds, things like that, are not bank deposits. They're not insured by FDIC or any other entities, and really are subject to investment risks, including the possible loss of principal amount invested. So I guess tell me a little bit more about the ETFs. What are some of the security functions or features that Bitwise puts in place to keep those safe?
Yeah, so we rely on third-party regulated custodians. These are custodians that are chartered in the US with the US government. They hold the assets separate from the balance sheet of the company themselves. So the assets are protected in the case of bankruptcy, for example, and they use institutional grade cold storage. So cold storage is really this concept of just keeping your Bitcoin or your crypto assets offline so no one can access them through a system that's connected to the internet. And these cold storage custodians, Coinbase, for example, is our custodian for our spot Bitcoin ETF. They focus 24/7 on securing digital assets. They've been doing it for almost 10 years. And they use what's called multi-sig or multi-client security. So in order to move those assets from one person to another, you have to have sign-off from multiple people. Often those multiple people would be people at the ETF issuer like Bitwise and at the company like Coinbase. So no single person or really no single entity has power or control over the crypto assets. It's really managed by a committee is the way to think about that, where you need a majority agreement on what to do with those assets. And because they're regulated in the US, they have to produce audits and filings showing that the assets exist that they say they're holding on behalf of clients.
Gotcha. So kind of what I'm hearing, for go back to our gold analogies, that you guys have a safe somewhere where the gold would be stored. There's people with multiple keys, so even if somebody stole the safe, they're not getting in there unless they get access to multiple keys within there. Is that a fair analogy? Yeah.
Perfect analogy.
Good. Well, it's all great and wonderful to understand what Bitcoin is and how to hold it, but why would I want to put it into my wealth plan? What is it? Why wouldn't I just buy gold instead or something else?
It's a great question. We often talk to investors about where Bitcoin fits into an investment portfolio or a wealth plan. There's a few reasons why we think it belongs in a portfolio. I would caveat that with, we're not one of those crypto companies or research teams that says you should sell all your other assets and buy Bitcoin. That's never something we would advise. We like to think of it as anywhere from 1% to 5%. In some cases, for the risk-seeking investors, we've seen allocations up to 10% of a portfolio. But really, 1% to 5% is that sweet spot where you get the benefits of investing in Bitcoin without having an outsized impact on your portfolio. Some of those benefits and some of the reason why you would want to have Bitcoin in your wealth plan or in your portfolio is that it's not correlated to traditional equities. Historically, it's had a very low or uncorrelated relationship with the stock market, with bonds. And so you add diversification to your portfolio, which is an important pillar of a portfolio in kind of today's investment world. It also adds an element of an inflation hedge. We talked earlier about what's happening with the US dollar, given the excessive printing of money by the US government. We see what's happening with runaway inflation. And what we have with Bitcoin is the ability to kind of hedge against that. Obviously, as we mentioned earlier, right, this isn't an asset where it couldn't go up and down, and you could, there's no guarantee of returns into the future, but you can add diversification to your portfolio. It's a highly liquid asset, so it's easy to trade in and out of, and it can, it has seen outsized returns in its history, which can add some upside performance. But if you size it correctly, 1 to 5%, to the downside, you're also, somewhat protected. You can only lose so much. And so we think a small allocation makes sense for many investors who want to hedge against inflation, who want to add diversification, and who want exposure to, potentially high returns.
Gotcha. Yeah, diversification really is the name of the game. So when you talk about correlation, what you're really saying is that Bitcoin tends to not go up and down at the same time as other assets. And so, from a diversification standpoint, for all asset classes, we want things that don't go up and down at the same time because, we've seen like in 2008, right? Where everything kind of tended to correlate or go down at the same time, there wasn't a lot of space or anywhere that you could be invested in that would have protected you from that. So I think it's always a good thing that when we get assets that have a long-term positive return, but provide, the opportunity for something to go up when everything else is going down, that's really important. And that's how we build our portfolios here at TechWise. Full disclaimer, we do use the Bitwise Bitcoin ETFs here within that. We've done a lot of research on how they correlate with the rest of our portfolio. I'm happy to show that to any listeners who want to see that and get a better understanding of why we do that. You can always reach out, give us a call at 719-413-5614. We're happy to talk about that. Now, Ryan, outside of Bitcoin, we hear a lot about other cryptocurrencies, Dogecoin or others, sometimes called scam coins and things like that. Is Bitcoin just another one of these kind of scam coins, or what makes Bitcoin different?
Yeah. There are a lot of crypto assets out there. There's a lot of coins out there. There's over 20,000 different crypto assets. So it is important to sift through the noise. I think one important stat that we like to talk about is that the top 10 crypto assets by market cap represent 90% of the crypto market. So there's many of those coins out there that have a very low market cap, very low liquidity. And because this is a permissionless ecosystem, because blockchains are really just pieces of software that allow you to settle transactions, anyone can launch their own coin or digital asset. And unfortunately, because of that, that does allow literally anyone to create their own digital asset and try to get people to buy it. That has resulted in many scams that have occurred. I think that's one reason why it's important to have a crypto specialist as a partner who helps evaluate and screen for those types of risks when we're evaluating what products to provide our investors with and allow them to get exposure to the space. But the reason that Bitcoin is different, there's a few actually. It really sits in a class of its own. Bitcoin is about 50% of the market. So I said the top 10 or 90%, but Bitcoin itself is 50%. It's the first largest crypto asset. It launched in 2009. It's been around for 15 years. And it really has stood the test of time from that perspective against these other crypto assets. We've seen in the past few years, not only the growth of an adoption of Bitcoin from crypto natives or people that are in this industry, but from traditional financial institutions like BlackRock, like Fidelity, like some sovereign wealth funds who are starting to allocate to Bitcoin as a means for getting diversification from the US dollar. So I think Bitcoin, because it's been around for so long, because it's had many boom and bust cycles and continues to come back and show that it has perseverance, and because it's the largest and most liquid and most widely available and traded crypto asset that many financial institutions around the world are starting to embrace and starting to embed into their investment portfolios. Because of those reasons, Bitcoin really is in a class of its own. The other crypto assets, some of them, yes, are very useful. Some of them, many of them are not, and I would definitely avoid.
Gotcha. I guess what I'm hearing from you is that it's kind of the tried and true, the name brand of it within there. What I also kind of heard reading between the lines there is that it's kind of at the beginning of its stage for the investment side of it. It's been around for a while from kind of the techie use, but it sounds like we're at the very beginning of, another Amazon, another Apple opportunity where, um, the beginning of its market. So I guess tell me a little bit about where you see the future of Bitcoin going.
Yeah, no, I think that's an accurate assessment. There's a great saying, which I'll probably butcher slightly, but something along the lines of, what technologists are doing in their basement on the weekends is what we all will be doing day to day in 10 or 15 years from now. And that's been true with the advent of the internet, with social media, with other types of interesting technologies. And we view Bitcoin as a new type of technology. And so for that reason, we are still very early in its life cycle, but we're starting to cross the chasm into mainstream adoption. We're saying that because we have Bitcoin ETFs that launched earlier this year. That was kind of an IPO moment for Bitcoin, where now investors anywhere can get access to Bitcoin in the traditional format of an ETF in their brokerage account or retirement accounts. But that's not the only reason why we think we've entered the mainstream era. As we mentioned, traditional financial institutions are embracing Bitcoin. There's corporations that are buying Bitcoin and holding it in their treasury. There's governments and pensions that are doing the same thing. And the number of users that are interacting with the Bitcoin network on a daily basis is reaching 1 million daily active users. So while that's a lot of daily active users, that's a really small amount when you think about networks. And it's been consistently growing over the past 15 years. So we just continue to see more and more people, more and more companies, more and more investors embracing Bitcoin technology and using it as a way to store wealth, a way to send value around the world, and a way to diversify from the traditional financial ecosystem. And for that reason, we think that it has a very bright future. And just one more bit of information that I would throw out there is that if you think of Bitcoin like a digital gold, today the gold market is a 15 to 20 trillion dollar market, but Bitcoin's market cap is around 3 trillion. So you have
Wow.
a lot of opportunity if you want to think about it from a market penetration perspective, or just how big could it get. There's many different ways to think about it, but it's a growing technology and it's being more embraced more and more by corporations, large financial institutions, and individual investors.
Well, Ryan, I really appreciate you coming on here and helping educate us a little bit more on what Bitcoin is, what it's not, and kind of where the future is. If somebody wants to learn more about Bitcoin or learn more about where you're seeing things going, where can they find you?
Yeah, appreciate that. It's been a fun conversation. I post a lot about crypto and Bitcoin on Twitter. My Twitter handle is at rasterlyrock.com. And you can also go on the Bitwise website, bitwiseinvestments.com. All of our research is free there. We really put an emphasis on learning about Bitcoin and learning about crypto before you invest in it or consider investing in it. So all of our research there is free. A lot of how-to guides, and a lot of great content that our team works hard on putting out there. So I would urge anyone to check that out.
Wonderful. Well, again, thank you for coming on and talking with us, and look forward to talking with you in the future.
Thanks, Evan. Would love to come back.